Are there tax benefits for investing in real estate? And if so, what are they? So you should properly consider whether this should be part of your overall investment strategy. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, are there tax benefits for investing in real estate? Recently, over the past, a few months, had a few folks reach out to me and a certain industry saying they took a course because they're high income, they should be investing in real estate for the tax deductions. And I completely disagree with that. However, there are significant, meaningful tax advantages for investing in real estate, just not the angle that they were told. I think that's bogus, doesn't make any sense to me. But there are some tax benefits for investing in rental real estate. Traditionally, when we think of tax sheltered investing, we're thinking of our 401k, our IRA, our Roth IRA, maybe an HSA, maybe a 529 plan, something like that. And I love the tax benefits, the tax sheltering that you get from the IRS rules for those types of accounts. The tax benefits for rental real estate, they're different, okay? They're different. And so to me, if you're a good fit for rental real estate, I love having rental real estate connected to those more traditional tax shelters as a way for you to manage taxes while you're investing through diversification. It's a beautiful thing. Now, rental real estate investing needs to be right for you. It is not right for everyone. But if it's right for you, I absolutely love it. And I love the idea of, if you have a 401k available, maxing that out, maxing the Roth IRA, and then everything else or other dollars in the right proportion going towards rental real estate. It can really work in harmony if it's a good fit for you. So what are those tax benefits, the reasons from a tax standpoint to consider rental real estate? I've got 4 primary ones. The first, and by far the most important, is depreciation. You get to depreciate, meaning you get a tax deduction, a reduction for a portion of the value of the property every single year. You get to depreciate the property every single year. So think about this. When you have rental real estate, you bought the real estate, you bought the property, let's say at this level, and then you had to do some improvements and you had to buy some things. Now, anything you needed to buy, a refrigerator, some paint, whatever, you can typically expense those things. So if you didn't have the rental property, if you didn't have that investment, you wouldn't have bought those things. So of course that's a deduction, okay? But if you update the kitchen, you put a new roof on, that sort of thing, that's a capital improvement. So you bought the property for this, you did capital improvements of this, and then you're getting this much in rental income every year. Well, one of the deductions that you get to use against that rental income before you pay tax on the net amount, you get to take that capital purchase, that overall, how much did you buy the property for, and you get to deduct. You get to depreciate, it's what they call it, that's the tax term for it. You get to depreciate that property over typically, a long period of time, 30 years, 39 years, a long period of time, okay? Depending on the type of property that you're purchasing. So you get to get a paper deduction of a certain portion of that purchase price every single year like clockwork. So say that you bought the rental, you bought the property for this, and you're renting it for this level every single month, and you have no expenses with it. Because you're passing on property tax, you're passing on insurance, you're passing on everything else. There's absolutely zero expenses. Now, that's obviously not true. But say there's no expenses, are you going to have to pay tax on all of that income? No. Even though all of that income landed in your pocket, you get to depreciate the property, meaning you get a phantom deduction in there, meaning even though you had cash, you were able to take cash out, you received cash of X amount of rental income, you don't have to pay tax on all of that because of depreciation. So to me, that's the number one. It's confusing. It's the number one reason, number one tax benefit that I see with rental real estate. Sometimes people ask, well, that's not that really big, it's not a big benefit because someday I'm going to sell the property and I'm going to have to include all that depreciation back on my tax return as ordinary income. Yeah, I hear you, but you've been able to defer that. You've got to keep more of that rental income in your pocket each and every year. And then, yes, you have to recapture that. You've got to pay tax on all that depreciation in the future. But you've been able to defer that tax along, meaning you've been able to keep more dollars in your pocket and use those dollars potentially for additional tax improvements and tax planning. So that deferral of that is extremely huge. Also, if you happen to buy in a distressed area, or if you happen to sell at a time when prices go down or something like that, you might be able to get that depreciation, and you might be selling the house for a lower amount, and you don't have to reclaim all of that, okay? So depreciation, don't let anyone fool you. That is an extremely valuable tax benefit of rental real estate. The second big tax benefit with rental real estate is a newbie, and that is the qualified business income deduction. This is something new in the Trump tax cuts, came out a few years ago, where you get if you're eligible, a 20% deduction on your taxes. 20% of that net income you get as a deduction on your property taxes. So let me keep the math simple. If your rental income minus your rental expenses at depreciation, if all that, the net amount is 10 grand, you get 20% as a qualified business income deduction. You get a $2,000 deduction in that case, where even though your net income was 10 grand, you only have to pay tax on $8,000. That is an enormous deal. Now, you need to qualify for this qualified business income deduction. You need to qualify for rental real estate. So make sure you're working with your CPA and CFP to ensure that you qualify, that you're not just fudging things here. You got to take great books and records. You've got to spend enough time in your rental real estate activity. Even if it's not you need to be hiring that out. So make sure you qualify, and if you do, you'll get a 20% deduction right off the, I want to say top, but right off the bottom, right after your net income, after your all your income minus your expenses gets to your net income, you get a 20% deduction off of that net income. That's a huge tax benefit. The third tax benefit also goes to out there in the future when you sell the property, okay? When you sell the property, all that depreciation deduction, let's say you bought the property for $100,000, you've got $50,000 of depreciation along the way you got to deduct. So now your tax basis is only 50 grand, and you sell the property for 125. Well, you've got to pay ordinary income tax on that $50,000, that depreciation. You've got to recapture that, okay? But then the additional $25,000 of gain is capital gain. And there's tax benefits to that. Sometimes you could be in the 0% capital gain tax bracket. Anytime, until rules change, which hopefully these laws don't, but capital gains taxes are lower than ordinary income taxes. So the fact that you got appreciation on that property and it's taxed at capital gains, that is also a tax benefit to you. But not just that. Most people, when they buy a rental, and I'd encourage it for you, if you're going to just flip properties, and this isn't going to be a big one for you, okay? But if you are doing rental real estate, oftentimes you're going to select a property that you hope can be part of your portfolio for many years, if not decades to come. And the fact that you get to defer all of that income along the way, that's huge. If you're just investing those dollars in the stock market, all your dividends, capital gains, anytime you rebalance or you sell something, whatever, you're going to have to claim capital gains on that. With rental real estate, that transaction is delayed years and years, again, decades even, and all that delayed tax is cumulative. That adds up to you over the years and can be a significant tax benefit. And then the fourth major point, and this one often gets under-communicated, underappreciated, is the fact that your rental income avoids FICA taxes. It avoids Social Security tax and Medicare tax. Now that is a big deal. Just did a video on how I expect that we're going to see a significant increase in the Social Security wage base, and there's all sorts of discussion going on in Washington, D.C. right now to significantly increase that Social Security wage base so that people are paying into the Social Security system and Medicare, FICA, on more of their wages, right? But rental real estate, that's passive income. There's no FICA on that income. And you naysayers might say, well, yeah, it's not counting towards your Social Security. It's not increasing your Social Security. I know, that's fine. We've got an issue with Social Security. We've got an issue with Medicare. The fact that you've got some of your wages where you're paying into that and that system and hopefully growing your benefit there, that's wonderful. But I see it as a benefit that this income, for now, avoids FICA tax. This is passive income. You've got to pay federal and state tax on it, but there's no self-employment tax. There's no FICA tax on this, so it avoids that additional 7.65% or, double that, 15.3% if you're self-employed. So the income, the net income that you get from rental real estate avoids FICA tax. That's a huge tax benefit as well. Now, there's all sorts of other miscellaneous deductions, miscellaneous tax benefits that may apply to you. You get to deduct, your cell phone if you're using your cell phone for to talk to tenants and talk to prospective renters. I mean, mileage as well. You get to deduct all sorts of things. Now, I would argue you're not going to deduct those things if they weren't an expense from the investment, and so it's sort of a wash there. But other folks are looking at investing in opportunity zones. There's some tax benefits for that. So it can be. There's a lot of other miscellaneous deductions as it comes to rental real estate and other tax benefits. The primary ones, though, okay, you get a free depreciation deduction every single year that lets more of the cash land in your pocket without tax on it. You get that qualified business income deduction if you're eligible. That also means more cash lands in your pocket without it being taxed. And then, of course, avoiding FICA tax on this income. These are all significant reasons. So to me, you've got to first consider, is rental real estate for you? Now, I've got my 4 laws of rental real estate. If you haven't seen that, check that video out. You've got to make sure rental real estate's a good fit for you. If it is, I love the idea of using traditional tax shelters, funding that maxing that Roth IRA, maxing that 401k, or getting as much match as you can from your employer or something like that. Using those traditional tax shelters, so you're getting those advantages, and also using rental real estate, so you're getting those tax advantages as well, and diversifying your income streams and your investments as well. I love that, okay? I love it. Work with your CFP. See if that's a good fit for you, and if it is, how you can structure your cash flow, how that plan fits in all 6 areas of your financial life. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.